Hello everyone, this is Moaz from Think Turkey, and in this video we want to talk to you about the Turkish real estate market, the economy, and mainly how we're going to do that is by talking about the inflation rate right now. Where are the interest rates at right now, right? What's the housing prices, housing market, what's that doing like right now, right? And if it still makes sense with all of this going on, if Turkey is still a market worth investing in. Okay, so let's take a look at inflation firstly, right? So last year we were in the 75-80% inflation, right? Where this is again the reported numbers. In real time, maybe it was like closer to, felt like 100%. Right now, the reported inflation rate currently is at 33%. Now, is this, really true or not? And, what's happening, right? How has it come down so low? Right? The government is aiming, like basically by 2027, their goal, according to Reuters News, different publications have reported on this and said that their aim is to get it to single digits. I mean, again, this is a little bit, I would say, a big goal, but again, reaching 33% is also quite a surprise as well. Now, why does this matter? It matters to us because the inflation affects everything from price of the groceries, fuel, and everything, all your basic necessities, including the cost of building materials as well. So, which in turn impacts your real estate property prices, right? So, now going back, let's give you a little bit of context and explain to you why 33% feels like a really good news. Between 2010 to 2016, it was 7 to 10% range. It was staying in this range. It was manageable according to emerging market standards, right? Turkey is an emerging market. So Turkey, Brazil, these type of countries are emerging markets, Indonesia. So this was considered pretty decent, right? But in 2018, things changed. A lot of volatility, policy shifts, global cost, supply chain issues were everything was happening at once, and it pushed past 20% for the first time in years. And then 2022 was when it reached the peak, more than 85% year-on-year inflation, one of the highest in the world at the time, right? Now, fast forward to 2024, inflation was still about 75% for most of the year, so which is last year, right? And then the government really started to change their policy. They switched up from the previous policy they have that they were sticking to, which was slightly unorthodox, let's say, and it was going with a very low interest rate. So now they switched all that up, replaced the central bank, the governor at the central bank, and then now we're looking at considerable improvement. And we're looking at a 33% inflation rate. All right, so now let's jump on to interest rates, right? So when I say interest rates, what do I mean by that? Is the interest rate is the bank's interest rate, basically. So when you put money in the bank, the amount of interest earnings you get back, right? So normally this is like 3-4%, whatever it is around the world, right? Roughly in major Western countries like Europe and North America, you get you get a small number, right? Because of the inflation is less as well. So here normally, because they had to increase the interest rate. So for most of 2024, the interest rates were about 50% and even going up to 55%, very high. Right, they wanted the whole year 2024 was all about control, tighter policies, trying to rein in inflation. Right, so they had to increase the interest rates, so that people spend less, and then that way they can control the economy and they can bring back inflation down. Now, according to a Reuters poll of economists, right, there in July 2025, so just last month, we could see the rate of the interest rate coming down to 36% by the end of this year. Moving forward in 2026, the prediction for the interest rate is about 25%, in 2026 by the end, basically by next year, right? So by the end of this year, 36, then 25, And then moving on till 2027, we're looking at 17%, right? So this is what the major investment banks are predicting, are saying, that this is where it's going towards. So what does this mean really for real estate, right? So what happens is that as soon as it reaches close to that 20% mark, right, which is supposedly supposed to happen by 2027, when that happens, people will start putting their money back into real estate because inflation will be controlled as well, right? So you're not really making that much money by putting it in the bank. Your money is losing value at 20%, and the interest rate is at 20%. So you're just stuck there. Whereas real estate is always known to increase in value especially over a larger period of time, right? If not for a couple of years, you may see a dip, but over a longer span, you do see growth. And traditionally, Turkey and lots of Asian countries, lots of even European countries are known to put money into real estate, into land, specifically land and properties, right? So this is what may happen if the interest rates do fall down back to those lower numbers. All right, so that's it for this part. Then watch out for the next part where I'll talk more about housing costs. What are the demand for housing in Turkey right now? What sorts of opportunities are still available in Turkey? So please keep an eye out for that. And in the meantime, thank you for watching. Don't forget to like and subscribe if you found this to be useful, and see you in the next video.